Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is a true real estate powerhouse who has now built a diverse and impressive portfolio across multiple asset classes. Today's guest is Jordan Moorehead, and Jordan is a Louisville native, a licensed sales agent in Texas, licensed broker in Minnesota, and an active rental property investor who now calls Austin, Texas his home. He currently owns 94 rental units. Actually, I think that number's probably incorrect based on what
Mhm.
he just told me a little earlier, and we'll talk about that. He just had a recent acquisition, which we'll definitely delve into today. But his portfolio consists of mobile home parks, single family rentals, multifamily properties, all of them acquired using the BRRRR strategy. And we'll talk a little bit more about that as well for those that aren't familiar with that terminology. Additionally, Jordan is the host of the Austin Real Estate Investing podcast. Guys, today we intend to dive into his journey, his strategies, and his insights on building wealth through real estate investing. Jordan, my friend, welcome to the show. It's a pleasure to have you here.
Oh, thanks, Kevin. And it's a pleasure to be here. I'm an avid listener of the podcast myself.
Oh, I appreciate that. Well, here we go. Let's make some magic happen today. Then, let's back it up a little bit, my friend. I gave you the introduction. I know there's more to the story, so tell us a little bit more about yourself, your background, and how you found your way into real estate.
Yeah, great question. So again, as you mentioned, I grew up in Louisville, Kentucky. When I was 21, I moved to Minneapolis, Minnesota, kind of got my feet underneath me in a career there. So I started a personal training business. After a while, I saw the personal training business had a ceiling that I was going to hit. I had employees, I had admin staff, I was growing a real business about it, but just knew that I was only going to make so much money in there. So I got a real estate license. But before I got a real estate license, I started house hacking. I was always interested in rental investing. And I just was looking for a way in. It really made sense to buy a property and live in half. Started helping other people do the same. And I built a good agents business about that. So I would help people get into house hacking, really help them understand the strategies and built a real estate team around that. And all the while was buying real estate investments, but kind of figured my way through things. I met people that told me exactly what to do, and sometimes I would listen, and sometimes I would not, and I would just figure it out on my own. So it took a while, but I eventually landed into mobile home parks and learned about them. Man, we're 2025. I learned about mobile home parks over 10 years ago and didn't buy my first mobile home park until 2023, but bought all sorts of stuff in between there.
10 years ago, and it took you that long to buy one. What happened, man? What happened? You were buying other stuff. What just didn't find the right opportunity?
I think, well, exactly, because when you're not looking and you're not looking the right
Yeah.
way, you're not going to find the right opportunity in the mobile home park space.
Yeah. Yeah. Well, let's talk about the most recent one. I mean, you obviously know I'm an avid fan of mobile home parks. We've been buying them since 2011. So I've seen just about everything. It's an amazing asset class. It was back then, still is today. And I think it will continue to be one for many, many decades to come. And so,
Mhm.
um, I guess tell us a little bit about your mobile home park portfolio, but more specifically, I mean, you guys literally just closed on a deal, I think a couple days ago you referenced. So maybe we could tell us a
Yeah.
little more about that one as well.
Yeah, so our most recent one is our biggest one. We just closed that on Friday. It was a 46 lot mobile home park with two single family homes at the front. I'm being told those can't be split off, but I'm going to really work on that, see if I can get those split off and sold. But 46 lot mobile home park with two homes, 1.32. We did get a $75,000 credit there. And of those 46 lots, 41 are currently rented way under market.
Okay. What is market in that locale? I think you said it was Corpus Christi. What's
Mhm.
market? 450, $500 a month?
That's like 550, 600 actually. It's pretty
Wow.
high. There's some as high as 800. That's like luxury communities,
Hmm.
The one across the street, so Kevin, we're at 325 here. The one across the street is at 425.
Okay. No, fantastic. So let's talk about the business plan here. You paid refresh one was it 1.3?
1.32.
1.32, 48
Mhm.
lots in total. What's the business plan? Obviously, below market rents. Are there utility bill backs? Is there an infill plan? What type of capital improvements you intend to make here? Just walk us through, again, from a 10,000 foot view, what the business plan looks like, and then what do you expect on the tail end? I mean, what do you intend or anticipate the additional value will be that you add over,
Mhm.
X number of months or years after you wrap up the business plan?
Yeah, so we think it's going to take a few years to get where we're trying to go, but we have 5 vacant lots to fill. We've got a total of 8 park-owned homes. Of those 8, 5 are currently occupied, 3 are not. They're newer homes, so they don't need a lot to be sold. They just need to be sold. So we're going to sell all the park-owned homes. We're going to fill the 5 vacant lots. We're going to beautify the entry. Doesn't look great right now. It doesn't look too bad. The roads are a little rough. They're not that bad, but they've got some potholes and they could be fixed up a little bit. So we're going to just fix the potholes. We're going to do all new mailboxes, all new signs, make sure everybody has skirting, simple stuff, but stuff that they have not done. So I would
Mhm.
say in this park, maybe 50% of the homes have skirting.
Okay. Is city water, city sewer?
Yep, city water, city sewer. It is billed back right now, so we don't have to do that, but they are reading the meters. We may bring in something like Dune or Metron and get those cellular meters. We just have to figure out what the operations are going to look like on it.
Okay. Any issue with the tenant base that you anticipate?
No, no, somebody just abandoned a home, but they're generally nice tenants. I've spent a fair amount of time there.
Wave the magic
It's
wand, and 3 years after you execute and entirety of the business plan, what do you anticipate will be worth? I mean, what are parks that are stabilized in that market? May not the luxury ones, but just the
mm.
good old, middle of the road, down the fairway, mobile home parks, no amenities. What do they trade for per lot in Corpus Christi? Probably in the, I would guess, probably in the what 60K per pad range, somewhere around
Yeah,
there.
we should be able about double it
Okay.
in 5 years or so. So the plan is probably to hold on to this one. We've got a one smaller park that we won't hold forever, but this one we're going to hold on to and fix it up and refinance it and just hold.
Okay. I know I love mobile home parks, but why do you love mobile home parks? What really is intriguing about the asset class to you?
The thing I like the most about them is a little weird. And I like mobile home parks because the people that live there are a lot of times just honest, hardworking people that need a nice place to live. So you can provide nice places to live for people and you can make good money doing it. I have had a lot of experience with Section 8 housing and apartment housing, and I've seen the people that live in those and just tear them up and don't care. But you see a nicely maintained mobile home park, and the people that live in there are great people. First park we bought, we were walking the park with the current park manager, and he took us behind his home and was giving us peppers from his garden. I mean, they're nice people. And
Yeah,
it's a good way to
I
make
agree.
money. So you can give nice housing to people and make a profit at the same time. It just seems like a great idea.
I agree. Any I don't know how close you are to the coast there. I don't know how I don't know how far inland Corpus Christi goes, but obviously there's a beach there as
Mhm.
well. Any issues with getting insurance coverage given recent hurricane activity?
So we're about 45 minutes inland.
Okay. I
So
didn't
there's a
realize it went that
bay.
far.
Yeah, so there's a bay, there's a barrier island. I think the closer in we would have some issues. So Flower Mound is kind of in between Corpus Christi and the barrier island, but I don't have any flood insurance. I didn't have any issues getting insurance. We got it through mobile insurance. Um, and we got a bunch of different insurance quotes. We actually paid them a little more just to get the right insurance.
Got it. Got it. So, what does the rest of your investment portfolio look like? Again, you got your hands in a number of different pots, mobile home parks being one of them. Sounds like single family, apartment complexes. Looks like you got some LP investments as well. I guess
Mhm.
just how do you manage your time? And, I guess what does diversity really mean to you as far as your portfolio is concerned?
So I wish I would have had a better outline for what I wanted my portfolio to look like from the beginning. Um, I got into real estate investing in 2016. As I mentioned earlier, I started house hacking. I did that 4 times. It was a cheap way to buy rentals, and I took advantage of it. As an agent, you're able to use your commission towards the down payment. So I bought a couple with no money out of pocket. Those were
And
actually some of my best investments.
and real quick, just for those, I think everyone should know what house hacking is, but just in
Mhm.
case they don't, give us the general outline of what that really means.
Absolutely. So, house hacking, the easiest way to think about house hacking is you're buying a residential property and you're renting out any space that you're not using. So, it might be a duplex and you rent out the other unit. It could be a quad and you rent out all of the three units, or it could even be a single family where you rent out the bedrooms. Or if you want a nicer living experience, you could buy a single family with a nice casita or an ADU in the backyard, rent that out on Airbnb. Maybe you let your family stay in it sometimes. I mean, there's all sorts of ways to do it for your lifestyle and your needs. And that's why I love it because anybody could do it. And it's a great way to buy rentals.
And when you were teaching it, were most of the folks that you were guiding, were they first-time home buyers? Were they able to get FHA financing?
Mm.
Anything that's 1 to 4 units is deemed to be residential. So, for those that don't know, you can get a residential loan on a 4 unit property. It's not considered commercial yet until it's five
Mhm.
units. And so, is that typically who your client was? First-time home buyer saying, "Hey, don't buy a single family. Go ahead and buy a duplex, triplex. Start generating some additional revenue, potentially cash flow, or at least worst case have other tenants pay down your mortgage for you while you're living there for free." Is that who your typical client was?
Yeah, most of them are first-time home buyers, but one of
Okay.
my first clients actually sold their dream house they bought. They were younger, so their dream house, it was a nice house, but they sold that house and they bought a duplex to live in. And that was how they got their rental portfolio started. We've helped anybody from 21-year-olds to 50-year-olds buy house hacks, but the majority of them are men in their 20s looking to buy a duplex, live in half, rent the other half, maybe have a roommate type deal.
Got it. What I know, I literally have not looked in many, many years. It's been many years since I bought a residential property. What are the FHA programs like nowadays? How much down? What are the rates at?
Mhm.
Um, just I'm curious to know if you keep up with speed on that.
Oh, yeah, I do. I'm actually a lender too, so I have some good
Okay.
ideas on FHA financing. You're still 3.5% down. It's 1 to 4 units. Rates are around 6% right now, slightly
Hmm.
above, sometimes a little bit lower, depends on the week. But you can get conventional financing for up to 4 units now too. That used to be a lot harder, but they've made that easier, and that's 5% down. You're probably going to be around a 6.5% rate, but you will drop that PMI eventually with conventional financing, where with FHA it lives with the loan, and they call it something different. They call it mortgage insurance premium, and it
Got it.
just never goes away.
I forgot that it was such a low amount down, 3.5%. That's
It's
absolutely
great.
amazing. What is the maximum loan amount with FHA? Is there one?
It's county specific. So in Austin here, I want to say for duplexes, it's close to 800. For fourplexes, it actually gets above 1 million. But again, it's county specific. So your county might be 400,000.
Hmm. And what are the qualifying factors for the borrower?
Pretty low credit score. So I want to say they go down as low as 580, but they're going to require 10% down below 620. And they're going to be, I want to say the maximum they'll let you go up to DTI cumulatively is around 50%. So you're close to a third of your income for the mortgage, but if you had other debt, they'll let you go up to about 50%.
What are I don't track this either, but foreclosure rates. Do you keep your eye on the pulse of what foreclosure rates are? And more specific, that question being towards FHA. I mean, I would have to think that, gosh, low credit score, low amount down, not a lot of skin in the game, that there would probably be more defaults in FHA loans than other type of conventional loans where one's putting, 20% or more down. Uh, any
Sure.
insight there?
Sure. No, it's slightly higher. It's not historically, it's not much higher than it has been, but for all loan types, FHA loans are going to be a higher default. And just for what you just said, there's less money down. It's not as much skin in the game. If you're in Austin and you bought your FHA loan in May of 2022, you've lost 25% of your value or more, and you're way underwater. You might just walk away from it because you find a better job in Florida.
Values have gone down that much in Austin
Yeah,
in the
it's
last couple of years. Really?
yeah, so my main business, I run a real estate sales team. We mostly work with investors and house hackers, and we've just watched prices go
Wow.
down for 3 years now.
Well, let's talk about Austin then. Is there opportunity at this point in time, or is there still a big disconnect between, what sellers want and what buyers are willing to pay?
There's a big disconnect there, and I think there's a lot of opportunity because a lot of people that are selling right now need to sell, and you got to find the need. But from an investor's perspective, it's still really hard to make them cash flow because even if you get close to that 1% rule, which is very hard to find, the taxes are still so high, and insurance is still so high, where it kills the deal.
So is that, I mean, I guess back to this most recent mobile home park, it's in Corpus Christi. It's 3.5 hours away, definitely
Mhm.
not in your backyard. Is that the primary reason? Is that it's just really difficult to buy any investments inside of Austin proper that actually cash flow?
I mean, I would absolutely buy a mobile home park here. The lot rents are 800 or higher. So, you can make deals work. I'm actually talking to a broker later today about a deal in Austin, which I cold called the owner several years ago, and now a broker has it.
Hmm.
So, I'm not against buying in Austin at all.
But
From
can you
a,
buy them at the right price? I guess is the question. Can you buy them at the right price in order to get a return on your money?
Yeah, absolutely. And that's always the problem. I was more referring to the residential housing space.
Hmm.
The prices went up so high and our rents were always pretty reasonable, but rents have gone down pretty considerably too. So it's hard to make the residential stuff cash flow. What we're doing to help house hackers cash flow is helping them understand medium-term rentals, rent by the room, and sometimes short-term rental too.
Like, just speaking of rentals, I mean, are we talking 10% discount on rent from the peak, 20%,
Yeah,
30%? I mean,
in the 20 to 30% range. I mean,
wow.
I know people we both know have apartment complexes here. The rents have just cratered because they built so much. So what Austin did really, really well has been great for tenants, but it's been terrible for landlords. And they let people build apartments like crazy. Anywhere and
Yeah.
everywhere that there was vacant commercial land, they said you can now build apartments on this commercial land. And because the population was booming, every developer from the country came around here and started building. Now we have a huge surplus
Yeah.
and rents are cratering.
It seemed that that was the general consensus in pretty much every major market in Texas. you
Mhm.
know,
They're good at
just
building.
just yeah, right, absolutely. I mean, Houston, Dallas, I mean, like just if there's space for it, which especially in those larger markets, Dallas and Houston, I mean, it's just they're so expansive. It just kept
Mhm.
building and building and building. Now we're obviously seeing the other end of the spectrum with some of these apartment syndications that are going bust. It looks like per your bio, you're very active. You're a very active investor, but you've also started, delving into LP investments. I mean, let's talk about that
Mhm.
a little bit. I guess kind of the reason behind it, how you find good opportunities, and how do you determine, who's a safe sponsor to put your money with?
So I think I can speak to that pretty well because I did not do the right due diligence and I lost some money in passive investing,
Okay.
but I've also made some money too. So it's not it it's just something you need to treat the same way you treat an active investment. And I think when I got started passive investing, I didn't understand that. I didn't understand I need to do due diligence on the sponsor, but also understand the project they're getting into. And because I wasn't educated, I invested in some projects I didn't understand. And there's simple stuff like, Kevin, I should have invested in mobile home parks with you rather than investing in new construction properties in
Mm.
areas that I didn't understand the rules around everything. I understood mobile home parks from a fundamental basis, but I didn't understand hotel builds. And I invested in a hotel build and that went badly. But I invested in some apartment projects that have gone great. So, they always say to bet on the jockey. I think all I did was bet on the jockey or people that I liked, and I didn't understand what I was investing in.
Yeah, yeah. No, it's a very valid point, Sarah. And it's I would say that it's even the best passive investors, you'll probably, if they made a lot of investments in the last 5 years, probably had a few losers there, right? And I think that's just the nature of the beast sometimes. And even some good sponsors, the ones that I would actually, probably go to bat for had some challenging deals, right? And I'm not going to say they didn't make any mistakes or couldn't have done things a little differently, but I think what really played out is you had this FOMO, this fear of missing out, and everyone is buying and going gangbusters, thinking that rates are never going to go up, thinking that prices are never going to come back down, and we know ultimately how the music ended now. So it's unfortunate, but I do think there will be a rebound coming.
Oh,
I think a
yeah.
number of markets. I don't know where Austin's at as far as like absorption of all the the glutton of units that were built, but I know a lot of the other markets are starting to see some stabilization. All the bigger ones that had a surplus of rental homes available or apartment complexes that were built, but it's just a matter of time. I mean, I remember this
Hmm.
playing out back in '08. I mean, more specific to Miami because I lived in Florida at the time. I wasn't in South Florida, but I was in the Tampa Bay area, and even here, I mean, most of my portfolio got crushed because of the tens of thousands of single family rooftops that got built for the population that just wasn't here yet, and it took many, many, many years to absorb that inventory. Miami was kind of the same thing with high rise condos. Gosh, I think they had at their peak, they had like 6 years of surplus of condos, high end,
Wow.
incredibly high end condos that were just sitting there empty. But guess what? They got absorbed. Now they're going through the same problem again. They've got a surplus of condos there again, but all the ones that were built back in '08 that sat around got occupied, and the prices shot up again. So it's just, some markets go through a little bit more of the roller coaster. Some are a little bit more linear in nature, but
Well,
time heals all wounds,
and to
typically.
that point, there's not very many starts anymore. So it looks
Yeah.
like, based on all the data, that late 2026 rents will start to go back up because all the units will be absorbed, as you just mentioned. So, people like to just look at what's happening now and assume that it's going to continue to happen forever. And I've been guilty of that mistake myself. And, we all did the same thing when everything was going great. We said, well, it's all going to continue. Rates are never going to go up this quickly. I think that's why a lot of people got in trouble is they did bridge debt, and I jumped in a bunch of deals with bridge debt. And they're still going, but they've had to figure it out.
Yeah. Yeah. No,
So
no, I agree. So what are you most excited about, Jordan, over the next couple of years? I mean, what keeps you up at night in a good way?
mobile home parks for sure. Um, no,
What
I'm
does that
very
look like? No, seriously, what does that look like? You're excited about mobile home parks. What's the plan over the next couple of years? I mean, do you have grandeur visions of X number of units, X
mhm.
number of properties? What markets are you excited about?
So I grew up in the Midwest and the Southeast. I spent all my time in Louisville, Kentucky, and up in Minneapolis, Minnesota. Now I'm down here in Austin, Texas. So I really like this middle of the country space as far as markets go because it's more of what I understand. I think
Hmm.
for any other reason, it's just what I know. And I think it's very stable, and I like the economics of the markets too. As far as where I want to go in the future, so right now we're at 4 parks. The first park we bought was a 2 park package, tiny little park, and then a 20 lot park. So there was an 11 lot park and a 20 lot park we bought together. It also had a single family home on it. It was in a great area of Louisville, Kentucky, and just absolutely loved that deal. But when we were buying it, I was nervous we were paying too much for it. So it's like a 15 cap now,
Yeah.
but when we bought it, I said, "Oh, that we're paying too much. This isn't going to work." What I didn't understand was the rents were so low, and all the value add that was needed there was just raising the rents.
Hmm.
It was great, all tenant-owned homes, stuff like that, where you can find those opportunities off market. It's just a lot of fun. Um, we're at between my business partner and I right now, we're at 136 units. I would say in the next few years, let's say 5 years, getting to 1,000 units would be the
Hmm.
goal. And I'm not in a particular hurry necessarily. I'm happy with where I am, happy with what I do. I'm not going to take any undue risks. We don't raise any money right now. This is all our own money.
Yeah.
At some point in time, probably going to bring some friends and family on, but I've got people asking me to take their money right now, and again, I've lost money investing with other people, and I would feel just terrible if I lost somebody's money. So I want to understand it so well myself before I start to take other people's money and risk that too.
You make some great points there. I mean, this is a point that I try to, to emphasize for folks that are getting started, more looking to go out and raise capital from other individuals. You really need to understand your craft first. You need to really put your own capital at risk first before you go selling an idea and a vision to other people. A lot of times your friends and family and colleagues and coworkers and things like that have worked really hard for their money. I've just seen many, many times. I mean, again, we've watched this play out, and I think there's a lot of inexperienced capital raisers that started doing syndications and raised a lot of capital from friends, families, and coworkers, and Really had no idea what they were doing, nor had a plan B in the event that something went sideways. And so I agree with you. I think it's important to risk your own capital, put your own capital work. But honestly, even then, so many people get hung up on like growth and scaling for the sake of scaling, just to brag that you have X number of units. Who gives a shit, really? Like, honestly, like I'm serious because I can tell you that, and I, running a fund that we run, I can tell you that it is very much a delayed gratification on the sponsor side of things, right? I mean, if you're running the organization appropriately, really, it's all investor first. I mean, it's all investors get all their capital back first, and that can take many, 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 many years. Um, Whereas, there's lots of deals I did personally many, many years back that I can tell you that me owning, 400 lots personally with my own capital, with no investor capital, I made way more money from a cash flow perspective than owning a few thousand lots in a fund structure. So, but again, I'm in it for the long run. For us, we're building a large, sustainable company, with a great staff, great team behind us. And so, for that reason, that's why we have scaled. But we haven't scaled just for the sake of scaling. We've only bought when deals make sense, and we've passed when deals have not made sense. And so, you make some really good points there. I think it's important to to hit those points across again, and that who gives a shit, guys, about the numbers. As far as total number of lots, it's about what are you actually putting in your pocket, right? Like,
Mhm.
are you building a company that's sustainable and can actually help you live the lifestyle that you're looking to live, right? If it's just for bragging rights, then what are you doing, right? Like, find another path. So, anyway, I think you're on the right track, my friend. I think you're making good decisions, and just slow and steady wins the race, right? Like we all heard that adage. We know that as from being kids. I mean, slow and steady, it really does win the race. Find the right deals, buy only good opportunities, pass on all the other crap that's overpriced or just for whatever reason isn't something you should put your money into, and wait for the right ones to come along. Cause I mean, there's always another deal around the corner. So anyway,
And I think that's the problem I had when I got started was I didn't know how to look for the right deals and I didn't have the patience to
yeah,
get into it and really dig through deals and understand that I need to pass on 95% of this crap before I find something any good.
that's right.
Yeah. So I took Frank Rolf's boot camp in 2019. So I learned about him in 2014. I was actually training a guy in 2014. He said, "Hey, you're interested in real estate. I just learned about mobile home parks. It sounds awesome." And he actually gave me Frank's book in 2014. I read it, I kind of was interested, but I didn't even do anything until 2019. In 2019, I had the opportunity to get into mobile home park investing, but just didn't take the time and the patience to get into it, and probably missed out on a lot of deals. Or maybe I didn't. Maybe I got in at the right time for me. Time will tell.
Yeah, I mean, even then, I look back and say, I wish I would have bought pretty much everything that we passed on, in the last 10 years. But it's just it's really no one knew that rates were going to go down, to all time record lows, right? No one knew that
Mhm.
institutional capital was going to come into space in a big way, which really started to inflate prices and values. And so and then on top of that, even back when we started buying parks, you had to bang your head against the wall to find debt on these properties. It
Mhm.
was incredibly difficult to find a bank that would understand this business model. Maybe a local bank, but a lot of local banks don't want to work with out-of-state investors, right? They want someone
Mhm.
local, and so Fannie and Freddie weren't heavily in the space, and if they were very picky on what they would lend on. There weren't a lot of good loan products, and so it was very challenging. And so even the stuff that you wanted to buy, sometimes you couldn't. You couldn't make the deals work, and so it's evolved in a very good way, I believe. The only downside I think of this industry, it's a downside, but it's also a good thing from a value perspective, is that there's a limited supply. Limited
Mhm.
supply means that we're all fighting for the same deals, right? We're all looking for the same properties and bidding against the same opportunities, which drives prices up. However, prices will continue to remain up because there's a limited supply. There's no new supply coming into the marketplace that's going to create a surplus or create competition for this amazing asset class that we're in. So again, it's kind of a good and a bad scenario, but I think there's only good things to come in the industry. Even the product, just looking at what the quality of the product was 15 years ago, it's night and day difference to what you get today. I mean, these things are really nice. I mean, they're built with the same materials that stick built homes are made with. And lots of lots of evolution with lead certification and green initiatives and energy savings. I mean, there's all these positive things that are impacting the industry. And the last thing is that you literally, like thinking about like first time home buyers that in Austin, I don't even know what the median home price is. It's probably still 450 or $500,000. But I
Yep.
think in the U.S., I think the median home price is somewhere in like the 350 range. I believe. Maybe I'm wrong.
Actually,
Um,
low fours.
is it low fours? Jeez, I had no
Yeah.
idea. That's
Yeah.
crazy. And I mean, you can go get a 1,200 square foot brand new, single wide home for probably like $80 a foot, and that's actually with a little bit of a markup, right? And yeah, what a great opportunity for first time home buyers to get into a brand new home at a price that all in is probably a third of what their total payment would be on the average median home in the U.S. today. So I love the space. I think it's got legs for many, many decades to come. And I appreciate you coming on the show and to talk about it. So, Jordan, if those that are tuning in want to learn more about you and your business and get in contact with you, where's the best place to track you down?
If you just Google me, Jordan Moorhead, you'll find anything about me. But I think an easiest way to reach me is jordan.moorhead@kw.com is my email, and that KW stands for Keller Williams. You can also text or call me 512-888-9122 if you just want to talk about mobile home parks or real estate investing in general. I'll absolutely get back to you as soon as I can.
And
But
then your podcast as well, correct?
yeah, and the Austin Real Estate Investing Podcast. Absolutely. We've got about 150 episodes out there. We're putting new episodes out too. So whenever you want to reach out in any way, I always should
Awesome.
help.
Well, good deal. Well, Jordan, pleasure speaking to you, my friend. I appreciate you coming on the show.
All right. Thanks, Kevin.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Buff, wishing you huge success. Take care now.